Hey everybody, welcome to a new and a little bit improvised episode of The Good, The Bad and The Bitcoin. My name is Dirk, and when I usually record, I sit in my office. However, I'm on holiday actually right now, so I'm filming this from a nice and very cozy villa close to Lake Garda in Italy. You can see the beautiful mountains that are surrounding Lake Garda in the background. So if you are living here, really, this is almost like heaven. Not only landscape wise, but of course also food and drink wise. I thought it's a good idea shortly before the Bitcoin halving to take a little bit of a holiday. But you know what? So much things happened on the weekend with cryptocurrency markets, of course, taking the major slump because of the escalating conflict between Iran and Israel. So I thought it might be a good idea to address this issue, not the war, of course, but how I behave as a trader, as an investor in a setting like this, and what probably we are going to see the next weeks until the halving. Well, that's actually just a week in front of us, and the weeks after the halving, and how you might also be able to position yourself and not fall so much for the panic that's out on the markets at the moment. And it's really, really easy. It all boils down to getting a perspective about the market. And my go-to chart for getting a perspective about cryptocurrency markets has always been this 1 week per candle Bitcoin chart. I always like to add 8 weeks simple moving average to that. So that's the blue line you are seeing there, plus the so-called bull market support band. So that's which consists of a exponential moving average of 21 weeks. That's the red line, and a 20 weeks simple moving average, which is the yellow line. And in all the bull markets so far, we've always seen a repetitive behavior of Bitcoin. Once a bull market establishes and Bitcoin closes the week under this blue line, so the 8 week simple moving average, it tends to go all the way down to the bull market support bands. So we saw this here, of course. We saw this happening here. We saw this happening here. We did not see this happening earlier here, early January or late January, when we closed also underneath. So that was kind of a correction that ended prematurely. What we've seen now, ironically, is the last week with the last candle close, Bitcoin closed exactly on the 8 weeks moving average. So that was here. And there are two ways this can go now, in my opinion. The first way is that we are going to see Bitcoin recapturing the 8 weeks moving average. That would mean it would need to close above 67,400 US dollars by next Monday, with a candle closing next Monday. If that doesn't happen, there is a chance that we see the behavior of Bitcoin that we usually see, and that means that sooner or later in the upcoming weeks, we are going to test the bull market support bands. They are currently trading at the lower one at 53,700 US dollars, the higher one, the red line, at 55,100 US dollars. Now, as we saw last time, it does not necessarily mean that we see a slump all the way down there, but it could very well be that we test like 60,000 again, that we test 58,000 again, and so on and so forth. And we can also look here, for example, how Bitcoin behaved in 2020 after the halving. So the bull market, obviously, in 2020 didn't start until way after the halving, but we saw the same pattern. A close underneath the 8 week simple moving average meant usually a contraction to the bull market support bands, with very, very few exceptions. Actually, the closing below the 8 week simple moving average back then really called also almost the top of the bull market there. But that's a whole different story. You can see really from this pattern that usually I mean in 75% of the time, we see Bitcoin, when it closes below its 8 week moving average, going all the way down to the bull market support bands. So now you see that this is actually quite a normal behavior, and it doesn't really matter what caused this. And this in this case, a potentially escalating conflict. During the last times we had like China banning mining, we had Elon Musk tweeting stuff and so on and so forth. It doesn't really matter what the catalyst is that causes this. The question, of course, is now how can you as a trader behave in a market like this so you don't get overrun, you don't panic, you don't get a severe case of FUD, because this is what we're seeing obviously on social media again, people fudding about, see, I told you so, Bitcoin is going to 20,000 now, Bitcoin is going to 10,000, this is the total collapse of a market. I mean, it's the same story over and over again, always the same story. When we see bad numbers a day or two or a week or two, you get all of those haters that kind of get the traction. When we are in the supreme bull market, you have all the Bitcoin maxis that get their traction. So it's our tasks as traders and investors, of course, to stay somewhat in between with a clear head. And my strategy going forward has always been, I buy a little bit when we touch the 8 weeks moving average. So I did this at here around 65,900, actually 66,000 US dollars. I added to my position. I have a little bit of an order ready here at 60,000, because this is a round number where markets like to reverse. And we've seen that also, that Bitcoin defended that number in the past with these wicks quite well. And I have orders ready if we touch really the upper and lower bull market support bands. When I speak of orders, I obviously mean limit long buys, because this is the way to go. We are still in a bull market. We are going to continue to stay in a bull market at least for another couple of months, if not if history repeats itself, for the next 12 to 18 months. But let's just conservatively say like maybe for a couple of more months, 4 months, 6 months. It doesn't really matter. I showed you the metrics on another video that I use to time when really the bull market has reached its top and it's time to get out of a bull market. If you don't know what I'm talking about, I'm going to here leave a link to that video up here. Yeah, that's really it, guys. So no reason to panic. Have a clear head. When in doubt, really zoom out. And for zooming out, I use this weekly chart because it puts away all those noise that we see on a daily level. If you're looking at 1 minute chart, if you're looking at 5 minute charts, and if you're still unsecure, I also invite you to join my Telegram channel. I mainly talk about grid trading on the Telegram channel, but every now and then when the market calls for it, I also give an update on how I behave in the current market situation. I did this yesterday evening for the members, where the Telegram group, of course, is free for you to join. There are no strings attached. You'll find a link to the Telegram group, obviously, in the description of this video and in the pinned comment. And yeah, if the market continue to behave in a wild way, you, of course, are going to get more updates from me. Until then, guys, stay safe and happy investing.